I think when we look at macro, on the margin, things are better. We have better visibility on tariffs into 2026. We have regulation and tax legislation visibility into 2026. I think the Fed is now being questioned about their unwillingness to cut. I mean, it was apparent 5 out of the 10 questions during the press conference were about that exact question. So there's a dovish Fed. I know consumers are overly cautious right now, but as you know, inflation expectations are far above CPI. That's a positive surprise if delivered inflation's lower. And then businesses have been really resilient. I think actually the economy might be weakening, but earnings have been better. So overall, with all the cash on the sidelines, I would say we should be quite bullish, actually.
Tom Lee addressing a recent U.S. military strike on a nuclear facility, an event that would typically trigger panic in markets. Surprisingly, however, stocks not only held steady but even rose in some areas. Lee invokes Art Cashin's famous market wisdom: sell the buildup, buy the invasion. In other words, the market often prices in risk before an actual event occurs. In this case, volatility was already elevated, investors had de-risked, and the VIX was high, so the actual event became a stress test the markets passed.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
In some ways it's not a surprise because, as you know, Art Cashin had the adage, sell the buildup, buy the invasion. And I think today is an example of that markets were kind of already nervous and anxious, and we've already saw de-risking, and the VIX was already elevated. So I think in some ways this is probably pretty typical.
Does it change your call for the rest of the year at all? And you think it displaces any other priorities or has any effect on bill passage or how that might get constructed?
In some ways, it actually strengthens the case for stocks to do better into year-end, because at the start of this year, we would have said U.S. bombing a nuclear facility is a black swan. Oil would be 120, stocks should be down 10%. And then we have the event, and oil is not really surging, and stocks are up. So I'd almost say that you've put another stress test into the market. We've seen it pass it, and I think it means stocks should do pretty well into year-end.
You think Hormuz remains a risk?
I do, but Brian Sullivan was off camera was mentioning a lot of strategic reasons why that may not be the case. I'm sure he's going to have his views, but I would say I'm watching oil, and if oil isn't surging, then I think it just means that the risk of the straits being closed is lower.
I guess when you think about the impact for U.S. stocks and bonds and the dollar, it comes down to growth and inflation expectations. And the key, Tom, is whether either of those things have changed in light of recent geopolitical events.
Yeah, and as you know, core CPI doesn't include energy. And as you know, when the ECB looks at core inflation, they exclude housing. Housing is not part of ECB's core CPI, and they're cutting. If you calculated U.S. CPI on the same exact basis, it's lower than Europe. So I do think there should be a dovish tilt towards the Fed, or that's the upside opportunity into year-end as well.
Tom, there seems to be a speculative nature to the market that's creeping in again. I wonder if it's a concern. And when I say that, I'm talking about the reception of some of the IPOs. I mean, granted, very well received, but Circle's now got a $62 billion market value. CoreWeave, almost $90 billion. You got a lot of SPACs coming back. I don't know if you've seen it. Yeah. Even Chamath is coming back with some SPACs. Any concern to you or no?
It is. I mean, those are echoes of 2021, which is some stocks get fantastically bizarre valuations, and I'm not naming any. And
you want to name some?
And then there is signs of speculation. And but the one thing that was true in 2021 that's not true now is when I meet with fund managers, in 2021 they said there was no stock they could buy because everything was expensive. That's actually not true anymore. Now the people I talk to are saying, look, the numbers have been better and numbers are going up, but the macro is making them uncertain. So there's actually a lot less risk taking by institutional investors.
So to the extent a speculative part of the market is something you monitor, it's not hitting a level that is that concerning to you?
Yeah, I mean, to me, David, it's a sign that the cohort that is speculating are the ones that bought the dip in April. As you know, it was retail, the Robinhood community, that was buying in April when institutions were selling and raising cash, and high net worth was raising cash. So it's the same crew now that is buying, the circles at one time's assets under management, which is tremendous. But it's not speculation to me yet, because I'd say high net worth is not really that invested, and institutions are still pretty cautious.
But what is the underlying view that you have that makes you bullish? Is it that the economy is hanging in? Is it that earnings are picking up?
Well,
what's the fundamental reason?
I think when we look at macro, on the margin, things are better. We have better visibility on tariffs into 2026. We have regulation and tax legislation visibility into 2026. I think the Fed is now being questioned about their unwillingness to cut. I mean, it was apparent 5 out of the 10 questions during the press conference were about that exact question. So there's a dovish Fed. I know consumers are overly cautious right now, but as you know, inflation expectations are far above CPI. That's a positive surprise if delivered inflation's lower. And then businesses have been really resilient. I think actually the economy might be weakening, but earnings have been better. So overall, with all the cash on the sidelines, I would say we should be quite bullish, actually.
Yeah, look, I think that over the weekend, we've now seen throughout this year, multiple geopolitical events have transpired on Saturday or Sunday. The traditional markets are closed. Bitcoin is 24/7 global and liquid. And so people do sell what they want to sell. Now, we see that stocks are down this morning, and I think that many assets will get sold when people are able to sell those as well. But also, I think that a core function of Bitcoin is not only the accessibility, but it is the volatility. And what you're seeing here is that people are reacting, whether it's positive or negative. Bitcoin just moves more. And ultimately, if you look over the last 90 days, Bitcoin's up 15%, and it's up over 50% in the last year. So I think Bitcoin investors are very happy that they're continuing to see volatility.
Tom Lee and his co-panelists argue that the opposite may be true. Stablecoins are better suited for transactions. They serve as a spending tool, while Bitcoin remains a saving tool. One is for utility, the other is for long-term store of value. As Lee puts it, people want to hold what will appreciate and spend what won't. Bitcoin remains the asset of the future, while stablecoins serve today's transaction needs. He emphasizes that we still live in a dollar-denominated world.
Just think that the overriding theme of the past 2 months, though, has been cool inflation and more dovish comments coming at least from some members of the Fed. That's what Bitcoin wants, isn't it? A rate cuts, QE, anything that increases the number of dollars out there. The big, beautiful bill is going to add how much? All these things seem like they're playing right into Bitcoin's wheelhouse. It was up to 110,000 from where it was at 17, 2 years ago? 17,000? It wasn't that long ago. So it's come a long way, but it is. And you can't look at it the way I'm looking at it.
If you think about that volatility, Bitcoin was down, $75,000, $76,000 just a few weeks ago.
Right.
We're back up over $100,000. And so, again, it's the volatility of Bitcoin is what is attractive to a very large audience of those holders. But also, I think that the large pools of capital now realize that it is big enough for them to allocate to. And that's where you're really seeing kind of this adoption, both on Wall Street and at the nation state level. And I think that's only going to continue.
And that's going to be for the original reason, and that is as an alternative to fiat, and there's only 21 million. Because stable coins, based on the dollar, if they're real and have 102% backing with treasuries or however they want to do it, that could, seems like, put it on Ethereum or whatever you put it on, that could take the usage case away from being a big benefit for Bitcoin, couldn't it? If Bitcoin was stable, get up. Let's say it gets up to $1 million a coin, which I'm just.
Well, Bitcoin is stable. Bitcoin is stable, right? One Bitcoin equals one Bitcoin, and I think what you're seeing is the Bitcoin dominance. I know,
but you don't want to use it necessarily. You don't want to buy a pizza that's worth $1 trillion in 10 years. So it's not being used for that yet. You could use stable coins the same way, couldn't you?
Yeah, well, I think what people are doing is they're saying, I want to hold the things that will be valuable in the future, and I want to get rid of the things that aren't going to be valuable in the future. So they're spending, they're literally selling the stablecoin. They're saying it's not going to be valuable in the future, and they're saving and holding the thing that's going to appreciate in value, which is Bitcoin.
Okay, so those are different usages then for Bitcoin. Bitcoin ever become the way that transactions are done around the globe instantaneously?
People already do that to some degree. I think it'll continue to become more and more popular.
But the question is, if in a stablecoin world, does it erode the value of Bitcoin in that regard? Meaning to the extent that people want to be able to move money from place to place to place?
Yeah, well, I think
that's part of the argument about what Bitcoin's able to do.
I think right now we still live in a dollar-denominated world, and so people are pricing the assets in dollars, and so people are going to spend the dollars to buy those goods. As you see more and more organizations start to price things in Bitcoin, which is a big if, but if that happens, then you will see Bitcoin become the medium of exchange, because now what you're doing is you're taking away that exchange rate or that volatility in dollar prices. Well, today we're announcing what is the largest initial fundraise for a publicly traded Bitcoin treasury company in history. We've raised over $750 million. It's a $1 billion merger with the Columbus Circle SPAC. And the idea here is we want to really be successful in the financial services sector. And so if you think about this ProCap SPAC, that is a dollar-denominated vehicle to go and do an acquisition. The ProCap Financial is the exact same thing. It's a publicly traded company where we can go and we can acquire Bitcoin. Right. And so I think that is where my entire career has sat. I sit at the intersection between the internet and the Bitcoiners and the institutional world. We've been very fortunate to have a lot of institutional investors participate in this round. But also, I think that there is a dollar-denominated world and there's a Bitcoin-denominated world. And what I want to do is continue to sit at the intersection of that and provide ability not only for myself and our shareholders.
Are you operating these businesses? Are you effectively the CEO operating them, or are you going to have teams that are doing this for you? How's this going to work?
Some of the different vehicles, obviously, we will hire entire dedicated teams. In the private market, that's what we've done. We own a lot of businesses, and we have CEOs and executive teams that run those businesses. I will be the CEO of ProCap Financial, which is the business combination with Columbus Circle.
Lee concludes with a major announcement that signals a new era of financial innovation. A new Bitcoin treasury company has raised over $750 million, the largest initial raise for a publicly traded Bitcoin treasury entity in history. Through a merger with Columbus Circle SPAC, this firm, dubbed ProCap Financial, aims to acquire Bitcoin and operate at the intersection of institutional capital and digital assets. Tom Lee, alongside other key players, plans to run this venture as CEO, assembling teams to scale the business. Please like and subscribe.